The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Darrell Martin.
Alrighty, folks. So come on back here to the Diagnostic Trading Hour right here on TFNN. I'm your host, Darrell Martin, coming to you live on TFNN and inside the eSignal platform and on your mobile phone at TFNN.mobi. Let's check out where the market's at right now. The S&P is down 1 point. The Russell is down 0.6. NASDAQ is down... let's see here. NASDAQ is up 7. NASDAQ is down 9. Reading it backwards, looking at two different things. So NASDAQ is down 9.5. Dow is up 7 points on the day. We're at 3 points right now, so pulling back. Looking on over, seeing where else we are. We got copper. Right now is sitting up 2% on the day, so big moves in copper. We got gold. Has been flying down. It's been crazy. Been absolutely amazing to trade. I've been in one trade though now forever. It feels like just hanging out, leaving my stop, and yeah, it's been pretty challenging just sitting there and waiting on this thing. I'm like, come on, move already. But so got a nice big down run there this morning, and started a little bit earlier in the morning, which I like on the metals, and wait a little bit on those commodities. But started a little bit early there and ran on down, and now looking for a long off that big move down there to about the 0.7 deviation level or so. Dollar index has been, of course, fantastic as well. We got silver is currently pretty flat at the moment compared to yesterday's settlement. We got natural gas is currently up 2.26%. Corn is down a quarter. Soybeans is down a point. We got the pound dollar up 81 pips. The euro dollar up 41 pips. Dollar franc is currently down 66 pips on the day. Looking on over at the dollar yen. Dollar yen is up 13 pips. The euro yen is up 65 pips. And the euro pound is flat. Aussie yen is currently up 132 pips. So some nice movement there on the Aussie yen. We got the Aussie dollar is up 113. So beautiful move there. Looking on over at the bonds. Bonds pretty flat on the day currently right now. Looking at them, I mean, there's been some good moves, just like there has been on dollar index, which has been fantastic. But bonds right now currently down at 30%. Dollar index currently down about 0.5%. Starting to do a little bit of a pullback from the move that we had earlier. And we'll see if it goes anywhere. I think it may just be time for it to settle down. I just closed out my last short on that, and, it's a good move. So I had a nice long little chop right there at the top and then flew on down. Looking on over at the pound yen's up 87 pips. The euro franc is down 5. The pound franc's up 16. And the dollar CAD is currently down 82 pips on the day. Oil, pretty flat at the moment on settlement, is currently down just a few ticks on the day. All right. So that wraps up our current market watch. And I'm going to go over a couple things with you today, but one of those that we can go over right here. Let's see, European stocks, they suffered a bit of a setback overnight. Let's see, looking at that, we'll pull it on up. And, let me enable something over here. I got to enable to show you. Okay. So, bring this up, and I'll bring it over here for you. All right, so a lot of European shares sliding there. The FTSE down, Germany DAX down 1.9%. So big move right there. Got the French CAC down 0.6, Italy down 1.8, Spain down 1.2. Bonds all over the place. Big mixed bag there. So up and down and flat on different bonds. Stocks are taking a breather right now. Unfortunately, that's causing some things to go on. But stocks are taking a breather after hitting that long-term record highs. So we'll have to see where it goes from there. But I'm ready for the stocks to stop taking a breather and start going. I don't care where you go, just go somewhere, right? So go up, go down. I'll take it either way. We got gold. Like I said, gold was nice. Had a nice move down there to 1,200, and now it's sort of chilling out, trying to decide if it's going to bounce off that magical number or not. And 1,200. I mean, it came down. It broke 1,200 by about 6 points. Went down to 1194, 94.5 there, and currently sitting at 1197. So 1,200 being a big barrier for it to break on the way back up. So use some caution with that knowledge. Big round numbers serve as big support resistance, and so 1,200 is going to be that big area that it's really going to have to fight to be able to push itself through to be able to do a pullback at the moment. So we're coming into the close here and at a 112. So anyways, but I'm gonna go ahead and so we'll get rid of that. There we go. So coming in on the close, 130. We're at 112. We only got 18 minutes left. And so being aware of that, I'm going to go ahead and close out my position. Had a $170 profit on the trade. So just wrap that one up and move on. I really wouldn't. And, just sitting back now and looking at this, sometimes it's so easy to get so focused on the charts, which is really good to be focused on the charts. But, it's wise to step back, look at important levels. And what are those levels being, a big round number like 1,200, 1,300, 1,100. And just looking at that right there, I'm like, it probably shouldn't even have taken that long. Knowing that it's going right into that big round number because it came through, it broke it by about 8 points. And when it broke it with some pretty strong volume over there. So let me see here. I'll show you. Give me 1 second. I'll pull it up and show you the gold chart I'm talking about. And there we go. Okay. So I thought I was going to show it to you. 1 more second. But had a nice long setup, and but like I said, just reviewing where the markets are may not have been the wisest trade to get into, considering that 1,200 price level. And sometimes I forget. I don't look at them. And let me show you here. Okay. So if I can get this thing over here to show, where is it? I know I have it, but it's hiding behind something. It's not popping up on top of the chart. Is that gold? Gold. I'm sorry. 1 second. I just got to figure out how to move it around so it'll show up. Okay. There we go. All right. So, had a nice short in the morning right here. So, gold going and flying on down there. Moving on down. And then looking at it right here, get a long to pop a buy right here. But, on whatever system you use, let's say you're looking at a bounce right there. But, looking at that long, I got a few points until I hit 1,200. And the market just broke through it. Look at this right here. Look at this volume right there. Okay, we got 4,500. That's just on the 10 minutes. If I switch over and look at, 10 minutes or 4 minutes, if we get 10 minutes, it'll be even larger. So we'll be combining those together right there, about 7,000 or so. A little bit more than 7,000 on that break below 1,200. But that's where all the volume happened. Look right here. Start. We go in 1,200, 1,207, 1,200.1. There we go. So all that volume starts picking up right as we head into it. And look, boom, boom, boom. Lots of volume right there, right as we break below 1,200. Okay, now that's going to make it a nice magnet level. So just something to be aware of. We break on down there and comes on down. We get a long. The most we're really expecting is pretty much 1,200. So if you're okay with a 3-point trade, then that's not bad. But if you're not, then don't hesitate. I mean, I've sat in this trade for a long time. Getting in here right around 11:04, and just now around 1:16, hopping on out of the trade. So just not much to show for it, and I mean, not a bad thing. At least I walked in a little profit on it, but just not much there. So just wasn't doing much of anything. Let's see here. And I also did it on the spreads, and I got the spread one on still. I just didn't want to be in the futures and have the margin fly up. One of the beautiful things about spreads is, I can hold those things right into the close because they're going to settle. They'll settle right where they are. And so get on that one, 1197.3. We're sitting right around 1197.1.2 right now. So, it's pretty much flat, break even at the moment. Got 20 contracts on. And so I'm leaving that one on. I closed my futures out, and but leaving that one on over here. So got in there, just a few bucks at risk, and of course I have a stop trigger working as well. So going for me to help out, right there at my stop, and just basically a couple $100 risk there from where I got in, because we had basically let in 1197.3. And it moves on down to 1195.5 is where my trigger price is. So about 18 ticks in risk. And let's see, where do we have it? Yep, so one tick right there below the low of that swing bar. And also I'm partially down just to a bid offer spread, which really won't be a factor once it expires, because it doesn't settle with a bid offer spread. You entered it at that price, where did it settle at? Everybody gets out at the same settlement. There's no bid offer payment on settlement. So anyways, just floating up and down on that one. We'll watch that here over the next 12 minutes or so that we got left on the trade. Okay, well I'll leave that over here on the side to keep that up. Okay, and I'll pull it back over as we approach expiration there. But like I said, just oscillating right now, pretty much right where I got in at. So not much movement at all. I guess it hadn't been worth the time. Okay, so what are some other things that going on in the news here? U.S. initial jobless claims. We'll pull that up and look at it. And so U.S. initial jobless claims near the recent low suggest labor market's recovery continues. So basically those are pulling on back down. If we go on over to Forex Factor, it's one of many websites where you can get the news listed. And let's see here. So they're trying to say how they're good, they're bad, whatever. Basically, the number went up to 294,000. That's worse than the expectation of 284. That means more. And they're also worse than the previous several months. So usually not a massive market mover in itself, but not a positive indication. All right, y'all stay there. We'll be back right after this break.
Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Darrell Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Alrighty, folks, we'll come back here to the Diagnostic Trading Hour. So just looking at some of the news that came out, we're talking about the unemployment claims. Also, G20 meetings are going on, which makes the markets a little bit skittish because they're waiting to see if some weird, crazy announcement happens in the market. And they don't know how to react to that, like what's going to come out, what's going to happen next. So, they can oscillate a little bit on those indices, and that's sort of, I think, maybe a little bit what we're seeing, even though the oscillation really started yesterday. But anyway, so just be aware that those meetings are coming out. It's always good to be up to date. You need to know your news. Even if you're just following the chart, you need to know what news is coming out. Not that, you may trade the news, you may not trade the news, but the news is going to move the market. So scheduled news is wise to be aware of. Things like unemployment claims. It blows me away when I hear about an oil trader and they don't know what oil inventory is. Obviously that's very dangerous to not know what that is, because it has a massive move, a massive impact on the market. And you definitely, you want to know about oil inventory if you're trading oil. Let's see here. I'm trying to find that position over here so I can show you that. Just I'll bring that up here in a minute. We're about to, looks like gold's moving on up right now, but still, we're seeing that hesitation, that pause. Whoa, right over there at, here we go. Still haven't quite broke that 1200 level. Okay, and so we're seeing it right there at 1198. Let's see, 0.5, just looking over here and moving up a little bit right now. We got a high price, 1198.5. We're sitting at 1198.4 at the moment. Okay. And let's see if I can show you. Let me bring up, said the scanner over here, because like I said, we're going right into the close on this one. And ought to be able to show you. There we go. Okay, so we're still in the close on this trade. And let's pull that gold chart on back up. So right here. Right here. Okay, so this is a trade we're looking at. We went long over here. And it's heading on in to the close, sitting at 1198.7.8 right now. Current price is pretty much matching. I use the end of day spreads. Okay. And so I'll just try to show you that right there. So pulling up, pulling down, but just riding that one in. And let's see here. It'll be a flat $9 fee, by the way, because I have more than 10 contracts. So that's always nice. And we'll see where it settles out. Like I said, we've just got a few minutes left on the clock. I can always also, pull the contracts. We're so close. Can close those out. And let me see here. So I could grab my stop trigger. My stop trigger obviously is now not going to do anything for me because we've reached the last 2 minutes of the trades. And so we're just going in right now, right into the last couple minutes here. We'll see where it ends up. We know what we got in at. And now we'll measure when it wraps up where we got out here in just a couple minutes. So maybe close to break even on this one. That's okay. So, and then we'll close it out. But we're a settle out because you don't have to do anything when Nadex settles. It just auto settles. Okay, so automatically, whatever price it's at, whenever it closes out there, it'll settle out. And it's not like a binary option where it's an all or nothing. Okay, so meaning like if it's one tick below where you bought, you lose everything or whatever. It's $1 a tick. So that's why I'm not as nervous about taking them into the close. Obviously, it's still not as wise to always take everything into the close. But anyways, not as nervous about taking it into the close because it's not an all or nothing trade, right? So if it's not an all or nothing trade, then we're really talking a matter of just $1 a tick. In this case, $20 a tick because I have 20 contracts on. But not massively different. And as soon as that clock comes up, I'm literally just waiting for what we got about 20 seconds left. You don't have to have that big heartbeat, just rush, because it's not all or nothing. But stay right there. We'll be back right after this break.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, Nasdaq, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, so obviously this was not the big trade like the last one was, but it's the one I did on air, so it's the one I want to show you. And so looking on over here, again, being a spread, so 1198.2 was the price that it settled at. Okay, we can see that expiration value, 1198.2. All right. And then minus, let's see, I'll type that here. Settled. All right, and then if I go over here, the price I bought at, 1197.3. Bought. Okay. So we'll do that. And that gives us a 0.9 profit. Okay. And we'll do that right there. Just trying to make sure this makes sense for you. All right, it ticks in 0.1. Okay, so it ticks in 0.1. How do you know that? Just look at the spread contract, 1190.0 to 1230.0. So 0.0, 0.1, 0.2, 0.3. So it ticks in 0.1. So 9 ticks profit. Okay. $1 a tick. All right. So $9 profit a contract. In this case, not huge. So a pretty small one. Had some nice big ones earlier, but $9 profit a contract, but we did 20 contracts. So 20 contracts. 20 contracts. So you can see where, quantity 20 right there. Okay. So 180 profit on the trade. And then it's $1.80 a contract, or it's $9 flat if you're over 10. So $9 in, $9 out. So minus, in this case, there we go, minus $18 fees. So 170, 162, so $162. Okay. In net profit on the trade. So hopefully that makes sense. Just trying to walk you through each piece, basically of how to calculate how much did you make on the trade if you held the trade to settlement. Now, again, this is not like a binary where, I don't like holding to settlement. Not like a binary contract in that sense. And just very, very important that you understand it's not like a binary where it's all or nothing. So if it would have settled like I bought 1197.3. If it would have settled 1198.2, I would have lost one tick. Okay, so I would have lost one tick, $1 times 20 contracts, would have lost $20. All right. So, anyways, but I did take profit on my gold contract, but I thought this might be a cool example on my futures contract. But I thought this might be a good example to go in and to show you on what happens at settlement on a spread. So, I mean, it would have had to move quite a bit against me before the gold profit I took offset the a spread loss if it did fly against me in those last couple minutes. So do be aware. I mean, benefits in the last couple minutes are the fact that you're not being paid a bid offer spread. Now, gold, honestly, it's like a tick or two. Like 1 to 2 ticks usually is the normal bid offer spread on Nadex. So not really a big deal. On some contracts where it's maybe 4 or 5, that obviously could be, a bigger issue. And the withdrawal is, I mean, hey, if it flies up for you, that's awesome, but it also could fly against you, and you could give up some money, give up some profit. So I could have closed a little bit earlier, locked in maybe $100 more if I just picked the top type thing, right? But if I would have closed it at the same time, I pretty much been looking at the same profit, okay? But just, be aware that obviously if it's a wider bid offer spread, you don't pay that bid offer spread if it goes to settlement, but you do take on that risk of it moving in the last 2 minutes. Not as big of a binary, because not as big as on binary, since it's only $1 a tick, not all or nothing on, a simple tenth of a tick. Anyway, so I'll grab that one just so I have it for future reference. But hopefully that can help a few of you out as well, just sort of understanding spreads and how they work at settlement. And I mean, people get all confused about them, and it's like, it's the difference between, now it doesn't matter if it expired at 1198.2 or if I just would have sold to close the contract at 1198.2. Okay? My profit is the difference between where I entered and where I exited. It's pretty simple. It's like on everything else. Entered and exited. It's not hard to figure out. People get really overwhelmed by them. But really, I mean, it really is that simple. So difference where I entered and difference where I exited on that trade. Okay? Just like you do on futures or whatever. It's just the cool thing is, look at the ticks. 0.9. It ticks in 0.1, so it's 9 ticks in profit, $1 tick, $9 profit a contract, did 20 contracts, made $180, take out some fees, still net a little bit on it. Okay. Anyway, so that shows you just one example of a live trade. And we'll go over here, and we'll look at the next item on the list. And again, just a reminder, when I'm choosing these spreads, when I'm trading these spreads, I had a trader send me a spread. They were doing a spread trade last night. They were demoing it on gold, doing what I teach, and just choosing that end of day, and they're up like 40, 50 pips on the trade. And they're trading gold spreads at night. People are like, oh, you can't trade at night. Yeah, you can trade the spreads at night, okay? They don't move fast. If you use the end of day, close proximity spread, okay? I'll respond in a second, operator. All right. Anyways, if you use the at the money, close proximity spread. And what I do is I just look at +5, -5, okay? Usually set this to 0.7 on the risk-reward ratio. And I look at the, end of day. So we got till like 2:30. So which contract am I going to choose? I only have a couple choices. If I'm long, I'm looking at one of these two. If I'm short, I'm looking at one of these two. I can tell you right now, I would rather, okay, have as much profit potential as possible and as low proximity as possible. So if we look at these three examples, they all the exact same proximity. This one has a lot more profit potential. These two are the exact same trade, basically, except for one has more profit. So if I was looking at these three contracts, which one would I choose? Let's just go up here. Let's just choose short so they quit popping up and down. Okay. So if I was looking at these three contracts, which one would I choose and why? Okay. So they're all expiring at the end of the day. All right. So all expiring at the end of the day. And just to show you the settings again here I have in the scanner, pretty simple. Okay. Just went in there and I just chose sell to make it simple. But looking at this, which one would I choose and why? They all have the same proximity. If I was going to go short, I'm not looking at an oil chart right now. So just let me disclaim that out there for you. Okay. I'm not currently looking at a oil chart. And what I want you to do is I want you to look at the proximity, and I want you to look at the risk, okay? And I want you to look at the expiration. Okay, I don't want this one that expires in the 16 minutes that cheat's trying to pop up on us, okay? So that one is not on my list of desirable trades at the moment. So that being the case, what should I look at as a possible trade? Well, if these two have the same risk and the exact same expiration, let's see, your people are hopping in them, and I'm not trading them. I'm going to go over here. Here we go. If I were to go short, that way it doesn't move on us, it'll be a little bit easier for the show here. If I were to go short on this trade, okay? And you can notice these proximities right here, all the same. So that's one area I'm going to give special attention to. See if I can find anything that'll highlight that effectively. Let's see, that's not working. Let's go with just a nice box. All right, so we're going to look at proximity. This expiration, I really like to look at width, okay? That's going to be a big telltale sign for me right there. All right. I'm going to look at max risk, and I'm going to look at max profit. I've already got my risk-reward ratio taken care of. Remember on our settings where I put 0.7, okay? So, anyways, why would I choose this trade right here? Like, would there be any possible reason you can think of why you'd actually want to choose that specific trade? There's no good reason right here. Look at the profit on it. Okay, right there. See that profit? We had the same risk as this contract. We had the same expiration as this contract. We had the same underlying proximity as this contract. But we have less profit. So there's literally no good reason to do this trade. There's less profit. That's the only difference between those two trades, is it can make less money. What's really important is in that bottom or top 30%, okay, it's going to slow down. So I want as much profit as possible as I can get without having to worry about it slowing down on me. Okay? So again, I want as much profit potential as I can get without having to worry about it slowing down on me. And it will slow down if it gets into that bottom or top 30%. What do I mean by that? Well, 55.50, 58.50, okay? So that's 300 ticks. What's 30% of 300? It's 90. Okay? So the top 90 ticks or the bottom 90 ticks on that 300 pip one, it's going to slow down. So that gives me about 60 pips of movement in my direction that I can take advantage of. Okay? And so like right there. And so it's going to slow down. And why even choose it? Like, there's literally no good reason. This is one of the number one reasons I built. This actually is one of the reason I built the scanner. Before there was ever a binary scanner, there was a spread scanner. Okay? And I built it because there's so much math to do to figure out what's the best spread to trade. Well, this tells me instantly. Same amount of time to expiration. Okay? Same proximity, same risk. Proximity means how much further is it away from the market, okay? And more reward. So this trade right here, like, definitely wins out, okay, over that trade. Now, if I really want to let my profits run, okay, if I really want to let my profits run, then I'm actually going to go with this trade right here. That it would be my preferred trade. Why? Because of how much more it can make. But you go, but look at all the risk. It's $408 risk. Now, if your account size is a factor, meaning you have less than $400 in your account, then that would be an issue. Okay? But I don't plan on staying in the trade to let it go down $400. That'd be a $4 move in oil. So one, just that realistic expectation of, is oil really going to move $4? Can it? Yeah. Am I going to stay in it till it gets there? If it does, no. Is it often that it'll do that? No. 4 points is a massive move in oil. Okay? So I'm probably going to get out about 35 ticks later. Okay? So I'm probably going to look at about a 35 tick to 40 tick loss on the trade. It doesn't matter if I choose this contract, or this contract. My expected loss, okay, is about 30, hopefully less, but as much as 35, 40 ticks on the trade. Okay? So this is the way that I trade. Now, most of the time, my losses are not going to be that big. All right? Usually I'll end up trailing the stop down, or I'll be getting a signal in the other direction, be getting out, whatever. Okay? But very rarely would I ever actually be just holding on to it. There'd be no reason to. Okay? So I don't really care if the risk is 150 or 400 as a max risk. I look at that like as a margin on a future contract. Okay? So if I'm doing margin on futures, okay, I'm going to be putting up, X dollars. But that's not my max risk. I got to put that margin, plus I got to put up drawdown on top of that. Okay? So if I have to put max risk and drawdown on top of that, like, not as cool. This at least caps what my margin is. And often it's the same as regular margin. Stay right there. We'll be back right after this break.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
We're We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, so that just gives you an example of, hey, if you want to, control your risk. I hear a lot of people, worried about, hey, I'm getting this or getting that or whatever. And if you're freaking out about your trades, you're probably risking too much. Okay? As long as your system is, working overall. So you want to control that risk. And you may not be able to do that in futures. Maybe it ticks too much. Maybe the tick size is too high. My rule that I like, the one that I found that I'm most comfortable with, where my heartbeat doesn't race, is when I do 5% divided by 6. So take 5% of my account, divide that number by 6, max risk per trade equals how many contracts I can, do on a trade. When I say max risk, by the way, I mean expected risk, like where if I take my stop. Okay? So if you're trading with less than that ratio, now, why do I like that ratio? One, it's hard to hit that 5% divided by 6. I'm not saying you may not have 6 losers, okay? But having that full loss on each one, say that 40 ticks on each one, that's pretty tough, okay? If you do, just stop, all right? But again, 5% divided by 6, not just 5%. And that should help quite a bit. On your risk management. If you can't do that, then you can step down to a couple other choices. One choice is you could check out, trading on Nadex. So if you trade on Nadex, then it's $1 a tick versus $10 a tick, like on oil. Okay, so you could do 1 contract, 3 contracts, 5 contracts. Okay, maybe $1 tick is still too rich. Okay, nothing to be ashamed of in that. Your goal is to be here in 12 months, not to be rich in 12 days. If that's your case, then go in and look at potentially doing micro FX, which, man, I mean, 10 cents a tick, that feels like it's just not worth it. Well, if you only have $100 or $300, you might want to consider that option, okay? Unless you just look at it as risk capital and you're okay with that risk capital. All right? So that's one choice you got right there, is looking at, micro FX. Now you could do 1, 3, 4, 5. It could be 50 cents a tick. Doesn't have to be $1 a tick. Okay? So there are other instruments to lower your risk size. I know we all want to come in with like nothing and make a fortune in a heartbeat. Okay? But by managing your risk properly from the outset and being patient in that process, even if it takes you a few months to build that account up, that's a lot easier than wiping the account out in a couple days. Okay? So again, I just always urge, you to do proper risk management on your trades and be patient, because you want to be trading for a while. Okay? You want to be here like 6 months, 12 months, several years. You want that to be your livelihood. You want to learn how to do proper risk management out of the gate. The worst trades I've made have been bad risk management issues, because they jack with your psychology. It's too much. What should I do? Maybe I should hold on to it. And you lose more. Or I'm up. I better get out, because I've been risking so much. It makes it really hard to hold on to that contract and just let it do its thing. There's so much psychology behind just good risk management. And there are choices. I mean, this pretty much the smallest of accounts. Let's look at this. Let's see, how small can you possibly go in an account and use proper risk management, all right? I'm not saying that it'd be fun to trade for, dimes, but just going in and looking at it, okay? Let's say you're risking 10 cents a tick, and you did, let's say your risk was 35 ticks at most. All right, stay right there. We'll be back after this.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated folic and humic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. You're watching Tiger TV.